You're looking at a $180 stock price and a dividend yield that's in the 8% region. So I mean that's huge because if you
Don't say that again, please. I need to buy some more stock. I need to buy some more stock.
There's no doubt in my mind that this stock's going to go back to $150 in the next 12, 18 months, right?
Hi, guys, and welcome to Tickers from the Limitless Podcast. This is the series where we review listed companies on the Jamaica Stock Exchange. I'm Matthew.
And I'm Thaon.
And today we'll be talking about NCB Financial Group, ticker as NCBFG. But before we get into the video, we would love if you guys would subscribe. If you're watching on YouTube, we're trying to get to 1,000 subscribers by the end of 2024. Also, you can follow us on your podcasting platform of choice. We're on Apple Podcasts, Spotify, all of them. It really means a lot to us. And without further ado, let's get into it. How are you feeling about this one, Dan?
Reviewing the company, I don't really have any reservations. Yeah, it's just one of those industry companies. Everybody kind of knows NCB. It's the biggest bank in Jamaica. Not necessarily by market cap, but just the biggest bank in terms of, I guess, the amount of users and so on. So it's it's like a Jamaica's bank, the National Commercial Bank. Yeah. So I feel like most people have an NCB account. I have one. I don't really use it.
Don't have one,
you don't have one?
No.
That's fair. I got one maybe 2 years ago, 3 years now. Yeah, but I don't really use it. I think it's kind of...
You're more red. More team red. You're more team red.
Some would say, yeah. But this isn't the episode for team red. But the Blue House has been, in the news recently in terms of, remember the Uber scandal? It's not even a scandal, really. It's just topical now because people have been using Uber and then NCB. Yeah, it's not even that, because even I have some friends where the amount is not reflective of how many rides they took or so on. But hey, I'm not the financial institution. It just
prove that.
Yeah, it looked bad. For those who don't know what we're talking about, by the way, keep forgetting that some people may not know, and we have these side comments and so on. But recently, NCB put like a lien on people's accounts. Basically, you owe them money, right? And it's because if you use your card, your debit card, or I don't know if it's with credit cards, but I know with your NCB debit card, and you take rides via Uber, because Uber requires your card information. That's how you pay. I don't think it's cash. I think it's just card. Actually, never taken an lies. I've taken an Uber, but not in Jamaica. And basically, what happened was the transactions weren't actually being done if you had an NCB card. So what happened was a lot of people were getting quote unquote free rides.
Well, I think what happened was like it would charge you, but then it would like pay you back. So it didn't net out. Like it would charge you and then you'd get the money back.
Interesting.
That's what I was told.
Okay. Yeah. But one day they were just like, no more free rides. And you took these, you owe me now.
I think not long after payday.
Yeah. So some people got hit with, hundreds of thousands of dollars that they owe the bank, and therefore I guess Uber. So yeah, I mean it looked bad because I heard they did put out a notice, but I think the notice was the same day or a few hours before they did that or so on. I don't know. But we're here to, I guess, talk about the financial group, because the banking aspect is just one part of it. Ain't that right, Preston? Yeah.
Yep.
So let's see what else is in the Blue House's portfolio. Let's start.
Yeah. So NCBFG or Financial Group. So it's a group of companies, more than one. So how do they make money? So you mentioned already that they're into banking. They have the National Commercial Bank or NCB, or NCB with the NCB Jamaica. They do some like merchant bank services. And I see that's more in like Trinidad, which is more related to like business and stuff like that. So they have the banking arm. They also have insurance, and essentially NCB's insurance arm is Guardian. So most people know, most people are probably, I guess most Jamaicans have probably heard of Guardian. NCB never used to always own them. They bought them, I think, like a few years back, and they are the largest shareholder in Guardian. They control it. They own 62%. And Guardian is really, really, really a big company because they operate in like multiple, let's say over 21 different countries. So they're in Jamaica, but then they're also in a lot of other Caribbean countries, or even have like an insurance, or they had like an insurance brokerage business in, I think, the Netherlands and stuff like that. So they're it's a pretty massive company when you really meds. So they do insurance, they do general insurance, they also do life insurance, and what else I was at between them, Guardian and Sagicor, they are like the two largest life insurance companies in Jamaica. So they're pretty big. I know, like, for example, Canopy is kind of trying to, I guess, gain some market share, and that's between Grace and Mussons. But when you're talking about like life insurance and stuff, and really just insurance in Jamaica, the big dogs are really Guardian
life and health.
Sagicor. Yeah, just insurance in general. Like Guardian and Sagicor are really some of those big dogs in the insurance space. So Guardian is really now NCB's insurance arm. They also make money. They have like certain investments and stuff. For example, they have NCB Capital Markets. They're like a stock brokerage there. So if you want to, like, buy stocks and stuff, you can go to NCB, and they have an arm that can do that. But then they also help businesses, like say you're a business and you want to list on the Jamaica Stock Exchange, like Omni recently. Omni in 2024, early 2024, they listed, and NCB Capital Markets helped that deal. I think NCB also did Mailpack when Mailpack listed. I don't know if you remember any others.
NCB did a ton of IPOs, especially in like 2019. I know a lot of companies came to market. And I think it was NCB doing most companies back then. I can't think of them off the top of my head for some reason. I think
they might have done
Lab
Tropical.
might have been one. Yeah.
I think they might
I'd have to double check
Tropical.
though. Don't take my word for it. But they did quite a bit of IPOs.
Yeah.
And they maintain a stake in a lot of them. That's also crucial.
Yeah,
a
we
lot
can
of the
show that
companies
later too.
that they do bring to market. You're talking about the investing portion. Sorry, you're talking about the investing portion. So in terms of them investing, that's how they make money, off the stock price appreciating in terms of the stakes or the
Buying low,
dividends
selling
that
high.
this company. Yeah. So
yeah, and it makes sense because, like, you realize that, think about it. So you have banking, insurance, investments, or brokerage. Like, you can give advice to the company. The bank, your bank, NCB Bank, can lend money to the company. So say the company wants to buy some factory, some warehouse. They can say, hey, you can go to NCB Bank or NCB Bank. Then suppose the company wants insurance. Their workers want life insurance or health insurance. You can say, hey, go to Guardian. We'll give you a nice deal, and you can just, be a part of that NCB ecosystem. So that's one of the, I think, big benefits about how in that finance space, and they're growing and have those different arms. It kind of makes sense because you can make these really nice products and offer it to people,
Yeah.
Yeah. So, and then they also, I saw that they were pushing, I don't really remember Link, but I haven't really heard much about Link in a while. Have you heard much about them? Yeah, that's the thing. I'm not sure. I mean, they have a website here, and I see that they allowed, I think they're partnered with Western Union, likely through Grace. And so they're calling themselves the #1 finance app. They have 250K link users. I don't know if this is just, but this is could just be how many people made it. I don't know how many people they actually have, consistently on it. They're saying that over $5 billion was transacted on Link.
As in over its entire lifetime.
Yeah. I remember
I'm
they
not
were
sure. I haven't heard
talking
anything about
it.
Link. Yeah.
I think it was supposed to be like a way that it would. I think it was like working on something like maybe like PayPal, like that you could just more easily accept payments as a business. So there's a guy who wants to buy his stuff, but instead of sending a bank transfer, he wants to pay with like a card. I think Link was trying to offer stuff like that. But yeah, I have really heard so much from Link, but that was something that NCB was pushing at some point.
Yeah, guys, if you guys know what happened to Link, if you could just leave that in the comments below, I'd be interested to hear, because we look at all your comments, to be honest. So we'd be very interested to see what you guys say, because we haven't heard much about Link either. I remember a couple of my brethren were saying since Legion came back, Link was dissolved. Don't know how true that is, to be honest, but it would make sense seeing we haven't heard anything from them in months. Yeah. I haven't even been, because you used to say, I don't know if I used to say ads or I used to see their stickers at maybe like some gas station. I don't really see anything from them anymore. They're the fact that you're bringing this up now, just maybe, who knows? But the fact that you're bringing it up now just made me realize I have not seen them, and I need to actually do some research to see what's going on with Link. Fair.
And yeah, they're just reiterating the point about the different countries. So, lots of countries across the Caribbean: Jamaica, Trinidad, Cayman, Barbados, Guyana, Grenada, even outside the Caribbean, Netherlands, Bermuda. The NCB really touches all across the world and mainly the Caribbean, but even through some of their subsidiaries, like I mentioned, Guardian, they're even in like the Netherlands. So but they're more focused, I guess, on the Caribbean and then also like more Jamaica, but pretty big company.
You realize Guardian's Trinidadian. A lot of Jamaican companies own significant stakes in these other Caribbean countries, companies or conglomerates or so on. It's not. I don't even remember when. I remember they bought them a few years back, but it's crazy to think that Jamaica really and truly is the financial hub of the Caribbean. Because imagine a company like NCB buying a conglomerate not a conglomerate, but a massive company like Guardian, and it's a Trinidadian company. Same with similar acquisitions with, CPJ being bought by AS Bryden, who, AS Bryden's a Trini company, but the majority shareholder in AS Bryden is Separate, which is a Jamaican company. So it's just kind of cool to see a lot of those kind of stuff and to make the connections between the islands. So that's just me.
Yeah. And I was just showing, so this is from their NCB's their most recent audited financials. This is up to September 2023. So they actually give like a breakdown in terms of the different segments of the business and like how much that contributes towards them. So if you look here, you're seeing life. So they group life, health insurance, and pension fund management. And that's about almost half of their operating profits. And then also general insurance is about 12%. So you realize NCB is really insurance, is about 60%. Insurance and then pensions, which is I guess investment management, part of that is really about 60% of their profits. So they're really, you realize that insurance is really, really important to them. They do make money from like the bank and stuff, but I think that's about just under 10% of the operating profits and stuff like that. So it's not really a big deal.
Around that.
Yeah. So the real big thing for them is their insurance, and which is why even it's like Guardian, because it meant if they didn't buy Guardian, then that means all of this 60% of their whatever profit. I guess, 60% of that profit wouldn't have been there. That would have just been, the company was still active and stuff, but that's how you see that, hey, Guardian it was a really big deal for them. It's almost like NCB buying Guardian was that kind of like separate buying, I guess, AS Barbados. Like it's a sizable, buy, especially like when it's like the amount of money that company now contributes to their, revenues and profits is a pretty big
fair
buy. So yeah, that's
slightly comparable.
Yeah. So in terms of what's going on around in like the ecosystem of the company, there's a lot of different things. Once again, it's a really big company, so there's a lot of stuff to think about. So this is just, a couple of stuff I pulled up. I was looking into like, Michael Leachin. Leachin is doing, he's a busy man. He's a big man. He does a lot of stuff. I don't know if you've been seeing like over the last 2-3 years, he has been making certain deals. I remember in the first time there was like this article about like Leachin goes nuclear, where he's like making some investments in other countries, and he's pushing into nuclear both on the energy side and like energy, like a nuclear reactor. And he's also pushing into nuclear technologies in terms of medical. So you can actually use things that give off radiation to, for example, kill dangerous like cancer cells, or you can use it to like help find cancer cells. And so he has been investing in companies that are, a big part of that space. So like there's this company, Isotope Technologies Munich, and one of his companies, Portland, is like is a big shareholder in that. So that's like, Isotope Technologies Munich is like Munich is somewhere in Germany, and then Isotope is some like, it'll give off like the radiation, a radioactive isotope. There's like a German company that is making cancer drugs. And
Not
I think
all
we can probably
isotopes, but fair. Yeah. Isotopes just it's the same element, just different mass. But yeah, it's
oh yeah, so radioactive. They make radioactive isotopes. I should say that.
Yeah.
So they are really big in that space in terms of like I know that they're focusing on like cancer drugs, and so yeah, like So I'm wondering, could there be some synergies like there with NCB at some point? I don't know. I mean, probably not for the Isotope Technologies Munich, but one of the companies he's associated with, Leachin, a lot of times he spends even though he's born
Canada.
in Jamaica, it's like, he spends a lot of time in Canada. I think that's might be where he lives more of the time. And there's this company that they work with called Canadian Nuclear Labs. And they signed some deal. Portland, his company, signed a deal with Canadian Nuclear Labs. And then this is more for the nuclear energy production side. So they are working on this stuff called SMRs, or small modular reactors, which is just basically what it sounds like. So you have like the typical older type of reactors, which are much larger. You have to build them on site. What scientists, I guess, worked out was, hey, why don't we, instead of having to build it on site, what if we could build tiny pieces in a factory away from the site, and then we just ship in those pieces and make a reactor. So you could do that. You could, do that a lot easier. And you could just say, hey, you can just buy a reactor from us, and you buy it in pieces, and then you can have it set up at the site. So that's what the small modular reactor is. And Canadian Nuclear Labs is working on like developing small modular reactors, and they can produce a lot of energy when you measure it, because it can produce a small modular reactor can produce up to 300 megawatts. Think about Wigton. Wigton right now is like 60 or so megawatts.
Yeah, 65. Yeah.
So you're saying that reactor at time, and it's, somewhat small compared to like the much larger reactors and stuff. But if it could produce, even more, can produce a lot of energy essentially. Like it's very, I guess, dense. You said like the size of the reactor versus the amount of energy. And yeah, it doesn't really produce as much. It doesn't really produce like all the emissions as you get with like burning oil and liquefied natural gas or cooking gas or any of those other, fossil fuels. And also like comparing it to, I guess, solar and wind, you don't need the sun to be shining. You don't need the wind to be blowing. You don't need it doesn't matter. Like it could be on a hill where could be in an area where there's no sun, there's no wind. and you just set it up there and you can get energy. So I don't know if I know that, for example, there was this article where, I wonder if I can find it, where it's like the port, I think the mayor of Portmore, like Leachin, was having a discussion with him about possibly setting up nuclear there. I don't know. And then, maybe NCB would likely play a role. So if there is ever that push, and I know like the Jamaican government signed some MOU recently, like saying, oh, we're going to work with, I think, Canadian Nuclear Labs, and I'm sure Leachin was likely a part of that. And even like there's this other company called MBM Holdings, which is a company in Dubai that's also into like the nuclear side. And I think Portland also signed a deal with them. So, he's doing a lot of nuclear moves. And so if there is any way that at some point maybe some of these nuclear deals could come in the region of NCB, like in the Caribbean region, NCB maybe would like a piece of it, because it's like, okay, if you need a bank to finance it as maybe part of it, or there's probably some role the bank could play with that. Would I use the red bank or would I use my blue bank? I would use my blue bank. So yeah, I think there could be there's some stuff about like what's going on with Leachin. The other thing is that, the company that he owns NCB through, and it's like the largest shareholder in NCB, is AIC Barbados. And then if you notice what's happening, that what I say is that the AIC Barbados, it's like they essentially took out some loans at some point, and they are now reaching a point that they're going to have to pay back that money. But they have been having, I guess, an issue with selling that, because I guess when NCB was paying out, NCB used to pay out dividends every quarter consistently, but then when COVID hit, they had to start paying out dividends. Well, yeah, they stopped paying out dividends for like, I think maybe almost 2 years or so. So that used to be a lot of money, and it used to also be a really high dividend yielding stock. So it's like AIC used to get a lot of cash from that, and they probably were using that to help pay back some of their debt or cover expenses. But then when the dividends dried up, they're kind of like, hey, we need money. And so if we can't get the dividends from the stock, we're going to have to sell it. So they've been, if you look at it, AIC Barbados has been selling a good amount of NCB shares over the last few years and stuff. And, it may end up continuing. So it really, they still owe quite a good amount of money. So, so yeah, that's some of the stuff I guess you have to look like with Leachin, because, he's still, through that company, they still control the NCB. They're the largest shareholder.
Yeah.
So
I think the nuclear thing could be a real thing if Jamaica actually does take on nuclear, because think about it now. The major hindrance to growth of a lot of industries is our energy cost, right? So our energy cost is very, very high. And if we can get like a cleaner version of energy that's much cheaper to produce, I think nuclear could be an option if done right. Everyone hears nuclear and they get, oh, Chernobyl and like those are real fears. I'm not discrediting them. Worse, these new earthquakes and so on going on right now, like Fukushima and so on. But in reality, though, it is a viable option in my opinion. The amount of energy you can get, and it is clean and so on, if done right, it definitely would be funneled through NCB. I don't see it would only make sense that, Leachin does that. And then the company that would set it up, of course, NCB would own a large stake, right? Or a stake, whether it's a stake or a large stake or so on, would need a lot of government backing and a lot of regulatory approvals and so on. So I'm not saying that would happen anytime soon, but I said I'm still doing it. They could still do it. And if NCB, even NCB cap markets, all right, if they're the ones buying his nuclear company internationally, that could also make sense. And it doesn't even have to just be energy too.
they buy
Medicine.
his company.
All right. Well, okay, not necessarily buy into, like invest in one of these companies, whether it's the medical arm of nuclear, or if it's actual nuclear energy production. I see him taking a stake with his bank. Why not? giving them loans and so on. It makes sense because you collect fees off of all of that you're doing. So you might as well keep it in the house. But oh yeah, I guess that was one of my points. I think another point too was, I'm not sure if you mentioned in terms of NCB, Clarion. I think Clarion Group. Clarion is like it's a bank in Bermuda. Well, NCB Financial Group owns a large stake in Clarion Bank.
They sold 30. Oh, you're saying that they sold part of their stake to Cornerstone?
Yes, they sold, I think, 30% of their stake, or are in the process of selling. I don't know if it was actually completed.
Yeah, I think they're still in that process.
I don't think it was. Yeah, I don't think it was
But they're still
completed.
gonna own 20%.
Yeah, they want to own 20%, and Cornerstone would own the rest for a big piece. Or was it 70% Cornerstone would own after that transaction? They would just own a large stake. So you're right when you said, AIC's been selling some NCB. NCB also, trying to reorganize and free up some cash and so on. So you can see a lot of transactions happening within that industry. Just in and around Leachin, he's just restructuring his whole portfolio. And this is just how it looks massively, right? Large sales, APOs, which you're probably going to touch on, and so on, all of those things. So it's just something to keep in mind, I guess, because he is doubling down on nuclear energy, it seems. So yeah, but it's a
not just energy, remember, nuclear, medical too.
Medical, yeah. And that's also where medicine is going currently. So it makes sense to bet on it, because that's targeted therapy, as you said, can find the cells. So having a radioactive isotope, and we were taught this in med school, like iodine 131, because the thyroid itself absorbs iodine, right? It's targeted towards the thyroid gland. Same with a lot of other isotopes or radio labeled. I don't want to get too deep in medicine, but that's literally where medicine is headed.
We spoke about a lot of that stuff. If you guys haven't checked out, we did an episode on Apex or IPCL, where I think we kind of explain a lot of those kind of stuff.
True.
But
was that Tickers? That was Tickers.
Yeah, I'd actually be willing to do. Let us know, guys, in the comments if you'd want us to do an episode, because I was actually reading on some of the drugs that company was developing, like some of the cancer ones, because they actually have like some ongoing trials and stuff, and some of the trials had finished and stuff. So they actually will tell you the date, and you can see, hey, like how much. So usually what they'll do is like they'll say drug. Okay, there's drug A, which is say the standard drug. This is the kind of drug that you'd give most kind of people with, say, prostate cancer would get. And so that's like standard of care. And then they're like, okay, we know that, it's this effective, or people can live for this long when they get it. Okay, let's try drug B, which is, say, the new drug they're developing, the one that has a radioactive isotope. So it will go after the cancer cells, and it'll try to just be the cancer cells, and it will give them like tiny bits of radiation and kill them. And they'll say, okay, how does it compare when we give the people that old drug or the other type of drug versus this new radiation drug? And does it make them live longer? Does it make them have less side effects? Does it make them lose their hair less? All those different stuff. So they actually give you a lot of data and stuff like that. And so, yeah, let us know if you want us. I could probably work on doing an episode like that.
That would be fun for us.
Yeah, some of the stuff is interesting. So, I mean, I think the big thing is, it's not just. So, I think one of them was actually on prostate cancer, and prostate cancer is very common, but it wasn't like just all prostate cancer. It's like subsets of subsets. But once again, I think we'll do a whole. Let us know once again. Comment below if you want us to do a whole episode on that. But yeah, I don't want to get in too much into that one now. What we could touch on would be some of NCB's competitors. So
let's do it.
there are, and some of the other, I know these are more, I guess, some of their listed companies. So you have SGJ, which is Scotia, NCBFG, Sagicor, which is SJ, also listed, JMMB, and also Guardian. Probably could have also put, I just means I could have put, I guess, GK in there, because GK is, I guess they're less, because they're less in insurance, less in banking, but yeah. And one of the things I guess I was looking at, so this is, I was looking at like how their profitability compares, and I should know that NCB had just released results recently. So the results I'm talking about are their up to what is September, yeah, their September results. You can see NCB actually did 15 billion in profits attributable to shareholders, you know. That's a pretty good. I know that Scotia for their last financial year, which ended October 2023, they did about 17 billion, and Sagicor did about 14 billion for their last financial year. JMMB did about 7 billion. So yeah, pretty profitable. Relate that to the price to earnings ratio. NCB, is this right? Because at the time we're recording, NCB is trading at about like what, $51. And that's giving it up. If this is right, this is a price to earnings ratio of just about 9. Comparing that to like Scotia, Sagicor, the JMMB.
Right.
Yeah. Versus like the Guardian. It's interesting because if you look at Guardian, which is, as we said, NCB is a major shareholder in Guardian. Guardian's PE, even though Guardian is, as we showed, most of the profit. I remember we said most of NCB's profit, the majority is insurance and pension management, which is Guardian. And it's funny that because of Guardian, I'd say because Guardian's nominally high value stock price, it trades at just under, this is about $300. Like, you ever think about this? Like, why wouldn't they just want to split? You ever wondered like why they didn't want to do a stock split?
I guess they just don't care about the share price.
But I don't know.
A
like
lot of
I was
people
thinking,
don't care about the share price. You know, that's
oh,
the
no,
worst
hold on.
part.
But it's not. I'm not saying that to care about the price just to say, oh, the price is whatever. But what I was thinking is that I remembered Cornerstone, right?
Yeah.
Cornerstone is they are like a financial company or a financial group, just similar to like a NCB Financial Group. And then they bought Barita, right? They became the largest shareholder in Barita. Up to the time we're recording, oh wow, they increased their stake. Interesting. Up to the time we're recording, Cornerstone owns like 76% of Barita, right? And I remember in the past, something that I saw, Cornerstone actually used their Barita shares and they used it to get a secured loan. So they essentially use their Barita shares as collateral. So it's like the market is valuing their Barita shares. The time we're recording, Barita is at $72. The market is valuing Cornerstone's stake in Barita at 67 billion Jamaican dollars. It's almost like they could say, hey, we use part of our shares and could you lend us 5 billion or 3 billion or 10 billion? Because if anything were to happen and we couldn't pay back the 10 billion, you could just sell, we could just give you our shares and they can sign a document to do that. Don't you think that they could do that couldn't NCB do that for Guardian? So if the stock price was higher, they could get higher valuation. So like, look at this, we're recording. Think about this. NCB's stake in Guardian, which is 61%, is worth 43 billion. How much did I say Cornerstone stake in Barita is worth?
I'm not sure.
66 billion. You think does that make sense to you? Like, do you think that it should be valued? Would you say which one is more valuable, Guardian or Barita? So it's like if they were to, if they were to do a stock split and say it was like, so let's say it's 300 now. Wonder what they don't want to split down to, like $100. They do a 3-to-1 stock split, or even like a 5-to-1 stock split, or 10-to-1 stock, something like they split, and then the share price, like people, that's one of the things I'd say. Like some people, they don't want to buy like a $300 stock, even though when you should know that the nominal value isn't like a $300 stock could be a better buy than a $30 stock. It could be a better buy than a $3 stock. But I think there's the kind of thing that say, hey, I don't really want to buy such, and this would probably be, I think this is probably the most expensive stock on the exchange. I don't know. That's just something that I was thinking about. Like one day I do think they're going to split it. And, when that happens, it's going to fly, but it's just like, I guess I don't know. I guess they don't
know.
want
I
it.
just
Doesn't
don't
even
see
cost
them
them any money.
to split it. I'm pretty sure it costs them money to split it.
What money does it cost you to split it?
I don't know.
You
I'm
just
pretty
have
sure there must be some. Yeah, it costs
No.
money. You have a meeting. You have to do this. You have to do that.
Oh, wait.
You have to sign some documents. It costs you money.
No,
I don't know
just
if it
means there would
costs.
be you actually would, because if the price, I remember like the JSC, they charge you fees. There's some fees that are charged. I think it's based on your market cap. So if your market cap is a certain size, like essentially the value of the company, the share price times the amount of shares out there, the higher the market cap, which is like what the market is valuing the business at, you would technically pay. I don't think it's a big deal though. I don't think it'd be a big deal for Guardian, but you actually technically would, if the stock split were to result in you having a higher share price, which I guess in Guardian's case, I do think that. Yeah, they actually would. Interesting. I don't know, but like I feel like you pay a little more in the trading, the fees to the
I think
JSC,
it comes down to? I think it just comes down to the aggressive nature of Barito versus NCB, and you can, or yeah, I guess NCB, since they would have more control, a controlling stake in Guardian, and Barito has just proven, or I guess Cornerstone, they've proven how aggressive they are. So they use the market very well, right? So they'll do these kind of things. I'm not really looking to a NCB to do stuff like that. It would be nice. It would be great, right? And I think some of those things would take NCB to certain heights, but at the same time, all NCB, remember, all this comes from top. And I think at this point in time, Mr. Leachin just cares about getting paid because he has bills to cover and he is financing his next set of investments and this and that. So I think he's just more. I mean, I guess you could still do these kind of plays in order to help you get cash, but if AIC is also selling NCB shares too and stuff like that, it's, I don't know, man. I just don't see it as his prerogative right now. It's not a priority for him. So, one of those things. But it makes sense, and that's a good point. And a lot of people should know that you can actually use your shares as collateral, right, and get a loan off of those shares and stuff like that.
You could get a cheaper loan rate, like if you could use you get an unsecured loan versus a secured loan versus an unsecured loan. Yeah. Yeah. I don't know. That's, I guess, something. When it
You're
happens,
thinking
it
about
happens.
it as an investor. They're thinking
they're
about
investors.
it as, they're.
But they're
yeah,
investors.
I guess they are, but they're more passive.
You guess.
Well, are they more passive? Things
they
are still going on.
Guardian because they thought
they're selling.
There was more value.
Fair. All right, so they are investors. Fair. But you're thinking about it from your point of view. Well, I don't know, because you could also be thinking about it from their point of view, and they could be making significant more money or return on their investments. But I guess it's just not a priority, bro. The priority, as
I guess
Leechin
when it
says, is what?
happens, when it
Dividends.
happens.
Yeah, when it
If you
happens,
even
as you
look at,
say.
I'll just look at Guardian's like share price. Since it got listed on the JSE, it just took a, when did it get listed?
It's a kind of nosedive.
Yeah, look at
that.
the stock 2021 listed at, hold on. When was it came back? Yeah, see, it listed 2021 at, should have closed at, and this was just under 900 Jamaican dollars. It's now at $300. It's done a straight nosedive. Even though profitability, it's, let's see, well, profitability did drop a little, but it's like it's on the come up. Probably gonna beat out 2023. Yeah. It's it trading today based on this PE of $3 or three. Yeah, just
Do
under
you
4
remember?
times.
I think it was. I don't know if it was a space or another podcast. But there was a point where, and don't necessarily quote me, but I remember hearing it, and they were saying that NCB employees were using Sagicor instead of Guardian for insurance. Do you remember ever hearing something like that?
No.
Never heard anything like that. Okay, maybe it's just me. But you guys can check that out still, because I found that interesting. Like, why not use the company you own for insurance? I don't know if that's still the case.
One of them has a better rate, I guess.
Shouldn't matter, but I guess it does. tells you a lot about businesses. But if that is true, right? Because as I said, I haven't backed it up. This is just us chatting on our podcast. Don't take your financial advice from us, guys. But yeah, honestly, that would signal a lot to me. Still, that would tell me quite a bit. Because why not use Guardian? Why use your competitor? Cheaper rates? Is that really why?
Better rate? I don't know. But yeah, one of the things also, I was trying to find out who was the bigger bank, because like we were saying, like Blues versus Reds, so the Blues would be NCB, the Reds would be Scotia. I don't know which one is exactly larger. I saw some statistics that was saying that Scotia and NCB together is about 60% of all the deposit accounts, and there are about 11 banks. This was apparently disclosed by the governor of the Bank of Jamaica, Richard Biles. And I don't know which one exactly is larger. I mean, I'm sure if you ask NCB, they might say they're larger. If you ask Scotia, they might say they're larger. I don't know if you can say, but it seems like both, when you combine Scotia and NCB, they are the largest bankers in that space. So they're pretty big. And something I was meant to that could affect NCB, because they're in that, well, I guess because they're in an insurance space, and also because they're in just the banking space, they're going to lend out money to businesses. And a lot of these businesses are, as I said, they're really in the Caribbean, and in the Caribbean is having more hurricanes and tropical storms. So because I even saw there was an article that I wonder if I can find it. Oh yeah, there was this article that was talking about Guardian and how they were affected by Hurricane Beryl. So the article was saying that Guardian was exposed to 50 million US worth of damage that they essentially had insured, but because they had reinsurance, or essentially Guardian itself had insurance with another insurance company, the reinsurers were the ones who had to actually deal with the brunt of that. So they apparently had to cover about 80%, the reinsurers. So Guardian actually didn't really get hit that bad out of the amount of damage. But you have to kind of think, okay, that could happen this time, but then what about the next time? Like, would that reinsurer be as willing to lend to them when they realize, wait, we just lost how much millions of US dollars by lending to the Caribbean? Do I want to lend them money again? Or maybe I won't give such a good ratio where they get covered. They only get, 20% of the damage, and then we have to cover most of that. So
and if you guys are
it will,
interested in the whole insurance industry, we did a whole Tickers episode on what general accident, and we went deep into insurance, the
Gina.
reinsurers, all of that. So yeah, Gina.
And I even saw some stats that was saying the Caribbean region on a whole was hit with 500 million US in damages from Hurricane Beryl. So Guardian was one of those. Luckily, they were maybe not as affected because they did have the reinsurance. But it'll be interesting. Like, I'm wondering how will they always be able to get that much reinsurance to cover them just in case? Will they always be that lucky? What if the next time, instead of 50 million, Guardian is hit with 100 million? What if they're hit with 200 million? So even if they have the reinsurance to cover a lot of that, that's a big payout because essentially the damage gets done to the cars, to the house.
Even 20% of 50 mil is still a lot
Is
of
a
money.
good amount, yeah.
So, yeah, they're still not as lucky, but I get what you're saying. It could have been worse.
Yeah. So that would be something to look at with and then also I mentioned the banking industry because if NCB say lent to some, I don't know, person who had a business and then the roof get blown off for the business and then all of their goods get damaged, can you imagine that that person is gonna have a harder time paying back NCB, and so the NCB is gonna have to probably restructure that loan and try to give them some moratorium or something to say, hey, so that you can cover it. I mean, I guess if it was a secured loan, maybe they could cover that, but then what if it was secured against those goods or I don't know, like those things that got damaged? Yeah. So there's things like that they're gonna have to kind of be careful about. And also there was something, I don't know if you remember this, there was this asset tax that was imposed where it was a lot of the banks in Jamaica, they have to pay 0.25% taxes on their assets. Not like the
you said
the
had
net
to?
or the, well, they still have to. So it was to be reduced apparently or halved to 0.125% in 2020, but then COVID hit, and then because the government essentially wanted to have some amount of money on hand, they're like, hey, the tax that we're going to lose out on this, it could be a good amount of money, so we would actually want the asset tax to continue, and it has continued. We're recording 2024 now, it has continued, and so that's a pretty big expense to NCB and the other banks and stuff too. It's a JMMB, all of them. I've seen a lot of the banks complaining about how much they have to be paying in the asset taxes. I saw the CEO of the JMMB group, Keith Duncan, he was saying that JMMB this was in a Gleaner article, September 2024, I think they paid over $1 billion in their asset tax, which is more than twice the amount that they paid out in dividends. So it's like, if the asset tax were to be reduced, like half, as they were saying that the government was saying, we were going to reduce it, then, maybe if that were to happen, that could mean NCB and the other banks and other financial companies could then possibly increase their dividends or buy other companies or make other investments with the money. So versus just paying it out to the government. So I want to see if that will be reduced. I mean, for something like that, that probably wouldn't happen until maybe the next budget review. So that would be early Q1 2025. We maybe can look out for that. And then I think we'll try to do a video. We did a video this year on the 2024 budget and some of the stuff that stood out to us. So we'll probably try to do one for the 2025 Jamaican budget to see, maybe that'll be something I'd look at to say, okay, is the asset tax going to get removed? Or you could even work out, wait, how much is NCB paying in asset taxes? Wait, if they were to not have to pay that as much, then what could they do with the money? What if they pay out the dividends? What if they, do other stuff with it? So that's something to look for.
He's very vocal on getting rid of that. No, who you think I'm gonna say?
A certain investor.
Yeah,
that likes
getting warm
fruit.
What? Brother, what? Yeah, but Mr. Berry has been quite vocal on that. Yeah, I think did he have Nigel Clark on one of his forums or so on?
So you probably asked him about it?
Yeah, I'm pretty sure he said something. remember him
I mean, it
actually
makes
confronting Nigel about it.
mm,
Because they
it does,
pay
I
out.
guess,
I
look
mean,
away. 'Cause it's like it's been 4 years since they said it that they were gonna
yeah,
reduce it,
yeah.
and
I mean, COVID
I
happened, so
mean,
yeah, but
mm,
fair. Yeah, fair play, fair play, fair play, COVID. But
yeah,
yeah, he's very vocal, and I guess I get it, because if you're paying out that much money for asset tax, yeah, just by holding assets, and it wouldn't. Is that necessarily just financial institutions? Is it
I'm
other
not. I'd have to probably
companies?
look at the exact
Yeah.
rule to see who exactly is hit with it, but it can encourage, or it can encourage people to then almost like maybe hide the assets, or maybe because I'm guessing the asset tax is probably assets in Jamaica, so then maybe it could say, hey, this should encourage us to, set up a company in St. Lucia or one of those other
Mm-hmm.
countries or something to maybe avoid it. I'm sure there's probably some ways to avoid it or reduce the amount you pay from that. So
Yeah.
I guess we'll see. Maybe at the next budget, a new minister of finance, Miss or Doctor, who is
Favor.
Dr. Faber
Yeah.
Williams?
Uh-huh.
Yeah.
Yeah. She needs to come on the podcast, by the way. Yeah, we need to get her on somehow, some way. Guys, if you have links, let us know, please.
Yeah. And also to mention interest rates, the Bank of Jamaica has been, didn't they just cut rates again? I think they have been gradually,
Yes.
them among other banks
0.25%.
across. So how much is it at now? It's 6.25?
Okay, I don't remember,
I
but
think it's
they just cut
6.25
rates
now.
this week.
Yeah. And they're among the other, like, other central banks across the world. So the equivalent to the Bank of Jamaica, but in other countries, in the US, the Europe, Canada, a lot of them are seeming to cut interest rates. So the interest rate is like, I think about it, it's like the interest rates, or the core interest rate by the central bank of that country, is almost like they're saying, hey, you can come here to the central bank, you can give us your money, and we will give you a very, 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 very low risk, almost guaranteed. It's almost, I mean, nothing in life, nothing is really guaranteed, like when as it relates, I guess, an investment, but it's as close to guaranteed as usually possible, like the government of the country. You can get 6% return on your investment. So if you put in $100, you get $6 back. And then, these banks and stuff are doing it with a large amounts of money. So it's like, if they can get an almost guaranteed rate of 6% by lending it to the central bank, then why would I lend it to this guy to do his startup when the startup could fail? Yeah, I could get 100% rate return, but I could get a 0% return and lose all my money, versus here I can get a almost guaranteed 6%. So it's like, hey, I'm not gonna lend out to the business, to the people who want to buy cars, to buy a house, or I'm not gonna lend to them without getting charging more.
Mhm.
So it's really, that's how the interest rate is controlled. Like, so if the core rate set by the central bank is 6%, it's almost like the banks could then, if say they raise it, the Bank of Jamaica raises it from the 6% to say 10%, it's like, it means all the rates usually will get raised very fast. And then if they reduce it, I mean, the rates usually don't get dropped as fast. So they'll say, if the Bank of Jamaica says, yeah, we're going from 6% to 10%, your rate, if you had a loan, a car loan, a mortgage, it goes up a lot faster. But then when the bank is dropping it, it's not going to just drop down suddenly. Your rate may actually stay the same for a while. And then there'll be almost like a little game of, okay, which bank is going to drop rates first? And then, if that person drops rates, it's like, wait, if I could go to them and borrow the money from them at a better rate and then pay off my car loan from, say, Scotia Bank. Like, maybe NCB is now giving me a better rate. So I'll do that, and then that will then put pressure on, I guess, Scotia, because they're like, oh no, I don't want to lose the loan because I'm making money from it. I'll give you a better rate. So interest rates seem to be going down. I mean, it's going on pretty slowly. But generally, it can be better for a bank because, especially I guess the point I mentioned that, hey, when the rate has gone up, they don't usually drop it down as fast. So it's
Mhm.
like they are getting money, say rates were to go down to 5%. So it's almost like they're borrowing money at 5%, but then they're lending out the money at 15%. Then, they can get like a nice spread on that. But yeah, like if interest rates go down, which will generally mean that eventually loan rates should go down, then that means more people may want to go to the bank to get loans. So they'll say, hey, I want to get a car loan now because getting a car is essentially cheaper now. Or I want to buy a house now because getting a house is cheaper. So then that can mean more business for that bank. So if the interest rates continue to go down, we may see more loans from these businesses, or more loans. The banks are able to get more
Lend.
loans because people are coming to
Mhm.
them saying, yo, I want to borrow money. I want to make, yeah. So
Yeah.
that's something I guess to look at too, to see how interest rates continue to trend. And we did mention, I guess, a bit about like the whole reinsurance and about risk-good insurance and storms. And something that I wanted to touch on, there was this, I don't know if you saw this article about the Bank of Jamaica is working on this thing called a bank switch tool. It's a bank switching
Okay.
tool where it's like the Bank of Jamaica will have a central database that will store what they call KYC, which is know your customer. So that it's supposed to make it easier for us to be able to switch between a bank. So it's like, no, it's kind of hard. Like if, people know that it takes a lot of time sometimes to set up a bank account some places. You have to physically go into branch for some places. You can spend hours. But what I understood was that the Bank of Jamaica is saying, hey, if we have a central database that has your data, then essentially, say you have an NCB account and you don't like NCB service, you like Scotia service or you like Sagicor service, but then you're worried about the time it may take to set up a Sagicor bank account, so that's why you don't want to switch to Sagicor. But what if it was very easy to switch to Sagicor because Sagicor could just get your data through the Bank of Jamaica once you approve it, and it could just send over the data and bam, you get an account really quick. That was my understanding that that's their goal, so that it would make it more competitive. So it's like, I guess we're talking about the example of the loan. So suppose I'm guessing that it probably would make it easier with that process too. So suppose you have a car loan and the rate is 10% and NCB is giving you that. But Scotia say, yo, we can give you a 7% loan. But then before the bank switch tool, it would have been hard to get that account, or that would have been like another factor to make you less likely to switch. But now, if you can quickly switch over the loan, you'll be like, hey, I'll do that. So then what I was seeing was that the Bank of Jamaica wanted that because that would mean that it would allow the Bank of Jamaica, to have better control over the economy, essentially, like interest rates. So it's like, what they were saying was that, say the Bank of Jamaica increases interest rates from 5% to 8%. What they want is that means they want all the other banks to raise their interest rates. But the banks don't necessarily have to. But then if you had more competition where people could just easily switch the bank, it's like that could make the Bank of Jamaica's what the effects that they want on the economy happen much faster. That's their hope that I saw. So what they were saying was that there was like a timeline on that. At the time they announced it, this was May 2024. They were saying it could take 18 to 24 months. So that's 2 years. I mean, maybe even 3 years. I don't know. But that could be something to look out to, because if NCB and other banks aren't careful, I think it could be nice, I guess, for us as the consumer or the customer, because then that could be more competition, which could mean better prices for us and better service. But yeah, I saw that. And some of the plans
if NIDS would help with that.
The National Identification System thing?
Yeah. Yeah,
Did
to
you
make
get
all
yours?
of those things easy. I'm not going to get one, right? The only way I get one of those cards is if I understand how secure my data is. I don't see why, after so many data breaches and all of these things, just generally in Jamaica, I should now just trust the government. That's just me still. So if they can answer
what's the
how is the data
benefit?
being,
What's supposed to be the benefit for you as a like what? Why should I?
I'm actually not sure. You know, I think you wouldn't need like a JP for certain things and getting through. So I guess
Oh,
it would
wow.
help with, you know, all of these kind of stuff in terms of your identification is, you know, XYZ. But I feel like they also collect like biometric data, you know, your fingerprints and stuff like that.
Oh, wow.
And
Yeah,
as
it needs
much
to be
as
very secure.
yeah, that needs to be extremely secure. I saw a guy on Twitter post a lot of questions asking about, you know, how secure is it? Is the data stored on a cloud or locally? If it's locally, how? Like, can anybody just walk in and just access it or steal like the, you know, the go in the server room and take like, you know, I think there needs to be some level of transparency with how they're storing the data. But that's just me personally. I mean, other people have gotten the card and so on, and kudos to them. They're less paranoid than I am, which is great, you know. But and yeah, I just have trust issues, man. I just have trust issues. But yeah,
Yeah. And some of the plans I saw, we touched on before that they seem to be what I was reading. I was watching like I think a investor briefing that NCB had with Mayberry. They brought on like the CEO and those stuff, and they were talking about what they're doing is essentially reallocating capital, like they're selling off non-core assets. So you mentioned NCB Cayman, and they said that they're selling. Well, this was February 2024. They announced that they're selling NCB Cayman to Berkeley Financial, a U.S. company, and then we mentioned that they're selling part of a stake in Clarion, which is a bank in Bermuda, to Cornerstone. So they're still retaining NCB, still retaining some of it, but they're saying that hey, these aren't core businesses that we want to focus on, and we'll sell that stake and use some of that money, pay down some of the debts, and then also try maybe invest more into some of our core stuff, which really is like I guess the insurance and then banking. I guess more banking in Jamaica and stuff like that. And one of the other things that they had hinted at, remember they did an APO this year or an additional public offering, and what they said, they raised a certain amount of money, but they said that hey, we would actually, what they were considering was that they would do more than one APO possibly. So they did the initial APO, but they may do more APOs at other points that they didn't really give, I guess, an exact timeline, but they're willing to essentially issue more shares to try to raise some more money to, I guess, work on growing their business and stuff like that. So you may see more APOs coming from NCB. We had touched on the possibility
how
of
do you
them
feel about
financing,
that, by the way?
about them doing an APO, another APO.
Yeah, like another, because they just did an APO. Suppose next week you hear them doing like another APO.
I mean, it's up to them. Is their company? They can do what they want with it.
Yeah, but what are your thoughts on it?
Well, I'm not a shareholder, so it don't matter.
Let's say you were a shareholder.
Well, I'd want to read the prospectus to see, what they say. Does it align with my goals? Do I believe the offer is priced fairly? Do I think they're getting good value?
Wow, this guy could be a politician, honestly. Okay,
Also,
fair.
they said they want to increase their return back to dividends. I think it was last year they started paying, 2023 they started paying back dividends. They want to increase their dividend payout ratio to about 50% of profits. So they want to be paying out. They want to be a big dividend payer, and it makes sense that, hey, remember we mentioned that AIC Barbados, which is Leachin's company, the largest shareholder, they get the largest dividends. So, and then they have debts and stuff, so they kind of want cash. So they're saying, hey, we'll have to sell shares. No, but if they were paying out bigger dividends, maybe they wouldn't have had to sell their shares, which they'd want. So, and one of the things that I was wondering is, could they increase their stake in Guardian? Because with it trading at the price that it's trading at, like, I mean, I guess it's like they probably couldn't get maybe big volumes, but I think they were even asked about that at investor briefing, a Mayport investor briefing, and they were saying that one of the things they should do is buy shares from in Guardian, because it's like trading the amount of shares you can get for the price. Like, it's a good buy, and it is our main business. Like, we showed it. The insurance and pension management is the bulk of NCB's profits right now. So I don't know. I was wondering if they could do that.
They could.
If they'd want to do that, I'd say.
Yeah. I think, just based on what we've been seeing them do with the cash is really, dividends. Like, Legion wants dividends. So we will have dividends. I also think that, I kind of want to touch on that APO point, because when you think about it, right? You do an APO. Firstly, a company the size of NCB, you're raising a lot of money. So you're going to need buy-in, not just from retail, but institutional buy-in, right? For the amount of, because NCB's last APO, how much money were they targeting? You remember?
But it may have been like 5 billion or 6 billion or something, but they never got the amount of money they wanted.
Exactly.
I think they ended up getting about 2.5 billion.
About half of what they wanted. So yes, they would want to do more. So that's my thought on a future APO, is if you can barely meet, and I guess market factors and so on, you could do an APO in a bull market, and maybe you get your full allocation. But it's difficult for the amount of money that NCB wants to raise to be able to do an APO of that size. Like, let's say you want another $5 billion. So you come into the market for another $5 billion. Are they what would they use that APO money to do is the real thing. Like, as you say, looking at the prospectus and so on, because from what I see, what they were doing is refinancing debt and so on. It wasn't really looking into, investing in Guardian and buying more in this and that, or just those more bullish things. It's more refinance, which makes the company more profitable and so on, but at the same time it's not what I personally would want them to do. Like, I'd want to see them being a bit more aggressive, talk about more acquisitions, those kind of things. So yeah, if you are doing an APO, at least it's all, whether you're doing APO, rights issue, whatever you're doing, right? The plans really have to align. And I feel like the plans for the amount of money that they wanted within the time that they were doing the APO really and truly didn't match up to what everybody else wanted, or their expectations, or their buy-in, really and truly. Like, I wouldn't see a lot of people buying into an APO at that time when they did their APO.
Well, I guess it showed, because they never really
got a hard time.
They got it's still a good amount of money they raised.
Yeah, but, there is a couple billion.
Yeah.
There is a couple billion.
I think the tough part is, like, I don't think they would do it for now, though, because if you look at it, remember, we're recording now. We mentioned the APO price was $50. Sorry, the APO price was $65, and the share price right now is $50. So essentially, the people I don't know if you see my screen, like I showed that the stock has been trading below the APO price for quite a while. So it's almost like if you are an investor in NCB, or say you are someone who was looking to invest in NCB at the time when the APO dropped, and you're like, should I buy into this APO? I don't want to buy into the APO. You would have benefited, essentially, because you could now buy shares at a much cheaper price than the people who bought the APO. You could buy, what is that, like
you're short
that's like 10-15% discount?
Yeah, because
you can look at the queue right now. Shares. Yeah.
30K at 52. How much money is that? And that's the number one sell.
Yeah. You can get a few $1 million. That's more than most
That's 1.5.
retail
Yeah.
investors would want. So it's a good
Yeah.
amount of money. And then one of the things I was even looking at, I was doing some estimates about. So this is their 2023 financial year, which ended September 2023. NCB did about 7.6 billion in profits, and they paid out about 1.5 billion in dividends, right? Which is about 20% of the profit. So I was doing some maths about the dividend yield. So the yield for that financial year, if you had say bought at $50, isn't really that high. That's like a 1% dividend yield. If you bought at the APO price, that's under 1%, right? But then for their financial year that just ended September 2024, they did a good amount. They basically doubled profits. They did 15 billion in profits. They paid out way more in dividends. They paid out 6.4 billion in dividends, which works out to 42% of profits. I remember they said that their target is 50%, so they're almost there. And if you work it out at the APO price, that's actually not that bad a yield. That's 3.81 before fees. But bids like at the $50 price, the people who can be buying now, that's basically a 5% dividend yield. So it's like it has benefited you if you waited out and said, hey, I don't want to buy into the APO. I don't want to buy into the APO. I'm going to buy that. So I was even like doing some analysis to say, okay, what if, for example, for their next financial year, they grow profits again, instead of 15 billion, I guess they increase it by 30%, 20 billion profits. They hit their 50% payout ratio. I was actually looking at it at the $50 price. That's actually quite a high. So if they hit those targets, with whatever they're planning, that's almost an 8% dividend yield at the $50, and at the APO price, that's about $6. And then for 2026, if they did it better again, increase profits to 25 billion, and they keep the same payout half of the profits. That's if you're buying at $50, that's almost a 10% dividend yield. So it has, once again, it has rewarded you to wait out. I mean, I guess the company has been able to reach this point because of the APO, because they were able to raise the money and they were able, I guess they did what they did. But I was actually amazing that, when you look at that, the $50 price maybe isn't so bad, especially if maybe you're like one of the things I'd say with NCB is that the volumes, like you can get those, especially because we mentioned that Leachin's company was selling. Leachin, if I want to show you something, Leachin's company has been selling a lot, and the pensions and institutions have been buying. So look at this. AIC Barbados, within their Q4, sold 12.5 million units, right? And then the National Insurance Fund bought a lot. They bought 32 million units. That's a lot of money, like 32 million units at, I don't know, $60. What is that? That's like a few billion or so, right? Or 100 million or so. And then once again, Q3.
Almost 2 billion. Hold on. 32. What?
Hold on. So the National Insurance Fund bought 32 million units. Say it's like, I don't know, $60 or $50 or something. How much is that?
That's almost 2 billion.
2 billion, yeah. So it's like,
yeah.
And then look at this. AIC Barbados sold 12.5 million units. So because you have AIC, I guess, under pressure, I guess it can kind of benefit you as like a pension or institution where you're like, hey, this is the kind of thing where we're willing to wait. We can wait 5-10 years to we're a pension, or we're so we can buy into essentially Jamaica's, well, it's either number 1 or number 2 bank, they control the largest insurance company, top 1 or the top or second largest insurance company in the Caribbean. And we can get this, at the $50. And then I guess once again, if you work out if they do get to do what their targets and stuff, dividend yield is actually pretty decent. My only thing though is that I guess the problem is like they've flooded the market with a lot of shares with the APO. And then also because AIC Barbados is under pressure. Like think about it. If AIC wasn't in that pressure to sell, then that means all those pensions or whatever that have been buying, or institutions that like the National Insurance Fund, instead of buying from, the say AIC, if they wanted NCB, they'd have to buy on the market. I mean, I guess they could approach like another shareholder, but they could just have to buy on the market. And then if they're buying on the market and they're doing that consistently, the price wouldn't be where it is. So my thing is, what if AIC Barbados is continue to pressure to sell and is selling millions and millions of units? What's going to happen? Is the share price, I guess, going to move? Because then if you have to balance the demand with the supply. If there's lots of supply because of AIC Barbados, even if there's demand, like if there's still tons and tons of supply, then you're not really going to get that price movement.
Also, he's been diluted from his own APO. So not only are you diluted, the share price has dropped, and he's also selling. It look like a sticky situation, because for me, I own a company, right? And I'm doing an APO and I'm already diluted. The fact that I'm also selling at this point, it just, for outside investors, to me, it just doesn't really look good. Like if you were an outside investor and you're like, okay, I want to buy in this company that Thaon has, but Thaon has done an APO and has been diluted because, Thaon didn't buy into his own APO. And then Thaon is now also selling the company. Yes, Thaon has other obligations and so on, but if you're also buying a company not just based on profitability, but you believe in management, you believe in just the strategic direction of the company, and the person at the head is like leaving. So to me, it just doesn't instill a lot of confidence. But that could just be me and other retail folks like me. But because clearly people are buying, and as you say, pensions are buying, National Insurance Fund is buying, right? And some would say NCB is too big to fail and so on. So hard for listed companies to die, especially with the backing of, government entities and stuff like that. But it just doesn't bode as well. But they are becoming more profitable. The net interest margins, I know, really hurt them during the pandemic. That's just because of,
people couldn't pay the loans.
That difference, for the loans, right? So interest rates are going up. You have to increase, but how quickly do you increase? So you have to eat that loss. So that did hit them heavily, and a lot of, and ECLs also hit them, expected credit loss during the pandemic as well, because you give out a lot of loans, but if to a lot of businesses, so and a lot of them were like tourists. I think it was in the tourism industry. A lot of their loans were, and remember during COVID, there were no movement days, there's no travel, and so on. So the tourism industry was impacted heavily. So a lot of these tourist businesses couldn't pay back those loans. So, you have to book a loss, and that's what ECLs are, basically expected credit losses. So you expect that this person may not pay you back, so you have to book that loss, to book it as a loss. So that hit them very heavily. So they are on I guess they're on the rebound, since their profits have doubled, are basically doubled. So they are on the rebound. Let's see what 2025 holds for NCB, because it's a household name, literally a household name, and I personally want to see them do. I mean, I want to say all these listed companies do well. It would look good for the market again. The reason the market hit those highs in 2015 and 2018 is because of big companies like NCB and their share price increasing. So we need to see some of that.
Yeah, that's actually funny. I remember at the same one of those investor briefings I was talking about. I'll see if I can try put the clip in there.
They'll get to a point, let's say March next year, where once they've gotten the debt under control, they want to start paying out 50% or more of profits, right? So let's assume they make $30 billion. What does the dividend yield look like?
Yeah, I mean, that's huge. So dividend yield, I mean, we're not used to seeing in Jamaica dividend yields getting above 5%, and there's probably only 2-3 people that get there, and certainly Couriers and SVL come to my mind. But if they get to $30 billion profit, and the stock's trading at even a conservative 10 times PE, then you're looking at a $180 stock price and a dividend yield that's in the 8% region. So I mean, that's huge because if you
Don't
money.
say that again, please. I need to buy some more stock. I need
Yeah.
to buy some more stock.
You absolutely need to
You know,
buy.
and Rob and Angus can't comment on this, right? This is just two guys just talking to themselves, right?
Yeah, yeah. No, I mean, as an analyst, I mean, this is why I love the stock. There's no doubt in my mind that this stock's going to go back to $150 in the next 12, 18 months, right? Even without the div yield. I mean, and then if you tell me the div yield can be 50%, 40 or 50%, then that's really a game changer.
So you have upside on the capital gains.
Yeah.
You have upside on the dividend.
Yeah.
I mean, it's all greed is a good thing.
I like the stock. I mean, hey, it makes up 20% of my personal portfolio. So now I can't tell you.
Oh, that's what you're telling everybody.
No, I can't
right?
tell you
so
how
I
much
can't
of the
get to my
stock.
20%. I get it.
So now I can't tell you how much I own because they'll deduce what my personal portfolio is. But it's not $10 or $20 million. That's all I'm going to say. I love the stock, and I think it's gonna do exceptionally well. And that's why we love having you guys.
Some of the Mayberry guys are saying that, hey, like easily this is like a, what do I say, $100 stock or so in like the next year. So I guess we'll see.
The P is
I think
8
it could reach
or 9.
I think it could reach $100
No,
in the next
but
year.
it also depends on, I guess, just the demand on a whole for NCB shares. Because with that APO, you always have a lot more sellers now at particular price
But
points.
also, I think because like you mentioned that there were people before who were buying NCBs in the hundreds plus, and then there are also people who are like, I've spoken to people where they kind of just hold on to it, and because people, no one wants them lose money, so it's like the stock is down, but you bought at 100, you bought at 200 or 150, whatever, but you just don't want to sell because you're like, if I sell, that means I made a loss. But then the stock is at $50 now, so it's like, okay, when say it goes to go from the 50 back to the 100, that person who was like holding, like they say they bought at 100, it's now reached back to that price. There's sometimes that, like that psychology of, I go sell now because I never lose money. I broke even. I good now. And then that will then create selling pressure. Or
Can you
even like we
imagine
mentioned the
that's an
$65.
APO?
Like there are people who bought into the 65 and like maybe it didn't meet their goal. Like maybe there was someone who's like, I think, in a few months it will be good. And then they're kind of like, wait, it's been down off all of this time. Like they thought they were doing better. And now when it goes back up to the 65, they'll just be like, just let me sell this. And then they'll just sell, So I think it's going to take something big for them to reach back to that $100. And I feel like maybe even the $100 price could be like a kind of barrier for them to pass. So I'm not really sure if I would confidently say like $100. But I mean, one of the things I'd say is if they do reach those targets or the profits, like say, for
And
2025, because of the dividend yield, I could see like, because as I said, if they hit so they did 15 billion in profit for this financial year. If they did 20 billion, that's a 30% increase. At the $65 price, that's a dividend yield of like just under 6% before fees. That's a pretty, decent dividend yield. So it's like that someone could be like, hey, I'd be encouraged to buy the 65 because I wouldn't mind 6% on my money or 5% on my money. So then that could help. But I don't know about $100. I don't know. We'll
I don't
see.
know either. Yeah. I have no idea. I think $100 is ambitious, but the market has done crazier things. So
I mean, they probably want higher. They probably would want because as we mentioned before, like they'd want the price to be over the 65 before they go and do another APO. Because can you imagine doing an APO and it's at $50 when your price is at $50 now? What about those people that bought in at the 65? I would say that they'd probably want the price to be above the 65. So say the price is 100 or the price is like 80, and then they say, oh, APO at 90. I guess they did a thing where their APO price was above the market price.
yes. They really want money though. Split it, then raise the money. Split the stock.
I don't think they're gonna split NCB.
Why not?
I think they're kind of like the higher value, especially when you
Nominal
compare it
value?
to like their peers. I think they're kind of
Fair.
like that still.
I personally don't see them splitting it. I agree with you there, but it depends on how much they really want the money. That's how I see it. But yeah, what do you think? Want to watch? Are you watching it?
Yeah. I am.
Yeah,
I am. I
agree.
think Leachin stuff is interesting. I mean, I want him to win. I don't want him like,
Yeah,
you know. But
yeah,
yeah.
I agree. I'm big on having Jamaicans just winning overall.
Mhm.
Yeah,
Mhm.
because it eventually it will come into all our pockets, whether it's dividends, whether it's stock price appreciation or so on. Can you imagine the amount of people that actually own NCB shares? It must be quite a bit of people in Jamaica that actually own, whether it's your parents, whether somebody bought in the AP or so. NCB is just, it's so ubiquitous. Somebody must have you're very likely to know somebody that owns NCB shares compared to many other stocks on the market. So yeah, Leachin winning is a win for a lot of people. A lot of people. And I think people forget that still. I think a lot of people look on billionaires and they're just like, boy, I don't really care, what them I do, blah, blah. But if it has such a material impact on, people, actual people's daily lives and their investments and so on, it matters. So it would be cool if he came on the podcast too. I think that's when we'd have to start charging every guest to come on our podcast.
So if someone knows, wants to hit him up for us, we'd be willing to talk.
Yeah. But great episode. I liked it. And if you guys liked it too, hit that subscribe button or just like it, whichever one, but we'd appreciate subs as well. But thank you guys so much for listening. And of course, happy investing. Limitless out.
Peace.